Well, it's time now for a look at the markets today at large. European stocks were down also following that rout in Asia. Fears of an AI bubble then again still visibly spooking investors even here. As always, we can turn to Jameel Ahmad, Chief Analyst at GTC, to walk us through these latest numbers. Hello there, Jameel. So market volatility is, of course, continuing with sharp losses across the board this week. Everyone is talking about AI these days. Is that what is driving the sell-off?
In short, it's not what's driving the sell-off, but I tell you something, Aaron, we seem to be making a habit out of speaking on Fridays, and each Friday that we're speaking now, markets seem to be in some sort of a free fall. Starting with NVIDIA, the earnings this week were actually very good. And that should have actually solved some of these questions about maybe an AI bubble. Of course, valuations still look very stretched, but the earnings were good. And I think what's surprising now is that NVIDIA, which was a company that many of us didn't even know about just a couple of years ago, and now accounts for as much as 8% of the S&P 500. I would also look at some of the other themes that are happening in financial markets that might be driving some of the selling, particularly in the oil markets. We had this surprise in turn that it seems that Donald Trump, US president, seems to be pushing a new peace plan between Ukraine and Russia. That is also driving some of the oil sentiment somewhat lower. And we shouldn't completely discount now that the US central bank expectations have completely reversed when it comes to hopes of another interest rate cut in just a couple of weeks from now. Historically, that is a big magnet for supporting stock market sentiment. Now that we have these expectations of lower interest rates being completely dashed, it's not a surprise that financial markets are falling heavily, especially when we have such significant and lofty valuations. I would also point out we have a couple of Fed speakers set to speak over the next couple of days. Of course, those are members of the US Central Bank. Should we start to see some, I would say, hopes that the US Central Bank might actually cut interest rates anyway, then it wouldn't surprise me if this market selling actually starts to take some of a pause.
So, Jameel, to add to some of the instability that you mentioned there, Bitcoin is also down around 5% today, more than 10% over the week. What's going on there?
It's the lowest values we've seen in Bitcoin now since roughly early April, so more than 6-month lows. Again, Bitcoin's seen as a risk asset. When you have risk sentiment being very weak in financial markets, there's not that much of a surprise to also see Bitcoin falling. But of course, Bitcoin has fallen steeply this week, losses of more than 10% as of this interview. I think if we go back towards the hopes and the themes that were driving Bitcoin and crypto so much higher early in 2025, it was hopes over the US administration, particularly Donald Trump, making America the crypto capital of the world. We actually haven't seen 1 year later that much in terms of tangible moves towards making those hopes a reality. And again, when you have higher volatility in financial markets, it's not a surprise that investors are also taking profit off Bitcoin. And again, I would point out that the moment we're having traders take profit, we're not in a steep correction for world financial markets or risk assets such as Bitcoin. We're just taking profit after valuations that are still very steep.
So, Jameel, what else then is driving the high market volatility this month?
We have to very much look at the US Central Bank expectations. We had this interview just a week ago. We had expectations that the US Central Bank would cut interest rates at around 50%. A couple of days before that, we had hopes that the US Central Bank would cut interest rates around 90%. As of this interview, we're now about 35%. Again, this government shutdown has gone on for much longer than anybody anticipated. And we had news this week that actually some of the tier 1 economic data reports will not be released at all. And some of the Fed policymakers have put it out there that if they don't get the data, they're not going to cut interest rates next month because they don't know what impact any of the uncertainties have on the US economy. So I would say that this is probably the elephant in the room and is the big driver in market volatility rather than the buzzword that's going around right now, which is AI.
Jameel Ahmad, thank you very much.